Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for the Fed. Are you excited? Hopefully you are. It's live FOMC time. Here we go. It's showtime. The Fed will be live on the show. Jerome Powell will be calling in just for us, just on this show. Won't be anywhere else, just here. Jerome Powell, the chair, is he going to deliver a pause? Is he going to deliver a hike, a 0.25 cut, or a 0.5 cut? And what does that mean? What's going to happen? So get excited, get ready. It's all about to begin. Oh, the Peckman.
The Beckman has become a member. 9 months.
9 months, flies. Indeed, it does fly. Let me turn that up a little bit. It's a little bit quiet. There we go. That's a bit better. Peckman, it's lovely to have you here. Congratulations for all your trades and investments. You're still in the game. That's what it's all about. Staying in the game as long as possible. And the longer you can, the more money you make, of course, over time. Okay, get ready. Now then, we've got a poll running on the community page. This is the main poll that ranks on Google. I'll give you the link. You can go and vote right now. This is the main one. Here it comes. There is the link. Let me give it to you again. It's on the community page of YouTube. It's where you're watching right now. Go and vote. 291 votes already. Massive, right? Let's refresh the screen. Here we go. 291. Let's have a look now. 291. Scroll down. It's the third one. Here we go. 297. 52% of you say a pause. However, 31% of you say a 0.25 cut, 12% say 0.5, and a hike is 5%. So by far, it's a pause, 52%, 297 votes. I've given you the link in the chat. Let's see if it's gone up in the last couple of seconds. It's like give you the chat. 297. Scroll down. 299. There you go. Nearly 300 votes. 53% say pause. We'll come back to that. The announcement will be very shortly. And then, of course, we have the big moment itself when Jerome Powell takes the stage and gives us his presentation. Now, it's not about the rate cut. It's not about the rate. When we get the rate, that is not It's the press conference, the way he conducts himself, the way he presents himself to the press, as to which flavor we get, dovish or hawkish. So when we get the announcement, that's just the beginning of the games. That's not the end of the games by any means whatsoever. Okay? So the first thing we're going to do is we're going to share this stream out to as many people as possible. Are you ready? We want to get 100 likes on the stream. How many are tuned in? Let's get ready. Let's find out. Here we go. Okay, let's get ready to rumble. Here we go. We want 100 likes in 1 minute. Here's the screen. This is where we are right now. It's showtime. 344 watching. There's our buy like Buffett t-shirt. There's take care of yourselves and each other. There's the mugs from me and Sensei. Much, much more in the shop. Go and check it out. 344. We want 100 likes. 77. Let's go, 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 go. Let's refresh it. 77 is now 95. Wow, that was quick. Let's get 100. We've got 353 watching. Let's share it out to more people. Rate cuts. Here we go. Let's refresh it in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Let's go, 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 go. And we've got 123. I'm loving it, loving it, loving it. Tell you what, let's get 200. There's 376 watching. So the best we can do is 200. 50% of people aren't signed into Google. So let's get 200. 200, let's go. Smash the like button. Here it comes. It's a great day. Are you ready to make some money? We're ready to make some money. Let's go, 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 go. Are you excited? I'm excited. I'm excited. Let's go. Tap the like button. We're getting ready. Let's get 200 likes. It's crazy today. The merry-go-round. Trade. Inflation. Blood on the streets. Donald Trump crashed the market. Oh, yeah. But now it's time to go up. 200 likes. Let's go, 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 go. Is inflation in down? Yes, 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 yes. Is it time to make some money? It is. Are we dancing in the gold mine today? Oh, yes. Turn that money printer on. Let's make some money. Okay. Have we got 200 likes? Let's check it out. 123 in 5, 4, 3, 2, 1. Here we go, here we go, here we go, here we go, here we go. 178. We're going to get 200 and then we're going to carry on with the show. Let's push this out to as many people as possible. Let's have a record-breaking audience. Let's get a great day on the markets today. This is what it's looking like right now. 184. We just need 16 more likes. Let's rock and roll. Showtime. Welcome to the show, wherever you are around the world. Okay, let's have a final look. Let's have a final look. Here we go. 178. Let's refresh the screen. Are we there? Are we there? 198. 2 to go. 2 likes to go. Let's smash the like. Smash the like. Go, 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 go. Let's go. Okay, how many we got now? How many we got? Let's refresh the screen. Is it 200? Chat. Oh, yeah. Chat. 218. 221. We smashed it. We smashed it. I'm loving it, loving it, loving it. I'm loving it like that. By the end of the song, 228. Keep going, keep going, keep going. Here comes the end of the song. 230. How many people are in? 43,000 views over the last 48 hours. There is 782 people have watched us so far on this stream. It's only going to go up from here. 79,468 subscribers. Will we get to 70,000 subscribers today? Wouldn't that be something else, guys? Wouldn't that be something else? 80,000 subscribers. That would be amazing. If you're not tapped the subscribe button, join the family. We're live 12 hours a day. Our aim is to bring you the best, most honest, most live, most real channel in the world. We have a network of channels. This one, we have the music channel. Every Friday night is a concert. I'm the world piano man. There's the concert. Join me this Friday night. We're having a quiz night. There's the chat. It says, help me raise money for charity, because the music channel donates money to charity. It does. We've raised a lot of money over the years on my show. In fact, I've raised millions of dollars. Here is my Jack Weech trophy from the Lions Club. So if you want to support my music channel where we have fun and raise money for charity, I did the global telethon event for the Lions Club all around the world, the biggest fundraising club in the world. I covered that. So there you go. Join me every Friday for the music show. This Friday we're having a quiz night. It's going to be mental. All right, we're having a quiz night. And if you want the extra channel, there's the extra channel. That's live 24 hours a day, 7 days a week. If you want to know all of my posts and all my trades before I make them, there's my X, there's my Instagram. If you're watching in the USA and you want some free shares from Robinhood, there's my Robinhood USA referral. You get free shares, I get free shares live on the show. How cool is that? If you are in the UK, you don't miss out. I've also got a Robinhood UK account. There's my Robinhood UK account. Click on that. You get free shares, I get free shares, Robinhood UK. What else might you like? If you want to become a member of the channel, there's the membership link. If you are on an iOS device, iPad or iPhone, you will need to select a browser and desktop version of the browser. And if you want, lastly, our Discord service, we have a Discord service where we have a premium service, only a couple of bucks a month, and and if you click on it, there's no free service. You have to subscribe if you want the service now. We are bringing out training videos just for Discord premium members, how to read a chart. You've got Ed Nevius who does scalp trading. You can direct message me, friend request me, and I'll help you any way I can. I reply to all of my premium members, and there's other services as well, other channels and stuff like that as well. So there is Discord. If you want Discord, it's just a couple of bucks a month. Free training. We've got videos. We've got training videos. We've got Ed, our scalp trading expert, Sensei Crypto, myself, plus all of the Lucasades as well. There you go. All right, there it is. Okay, 15 minutes to go. Let me make sure that I've answered everyone's questions. Live long and prosper, says Terry Rose. I'm sat on the roof now, ready with my cup of tea and gingerbread men. Oh, that sounds good. Lucas Age, the time is nigh. Let's go. It's a good day. Just have a feeling we're in a 25% surprise cut. That would be great. Well, it could be, as long as it comes with a dovish tone, not an emergency. Reporting for duty, front row. Let us hope it's a good report. RB, out my thumb. I smashed the like button too hard. You should already be in. I'm just holding strong no matter the outcome. That is right. 0.25 emergency cut. We don't want an emergency cut, because if he doesn't do a rate cut, the market is going to crash. That is not correct at all. It's already priced in that he's not doing a rate cut. So I don't see that. It's all about the dovish tone. And that comes after the announcement. In 15 minutes, we get the rate decision. And then half an hour after that, we get the presentation. The presentation is when he talks to the press, answers the questions. That's what it's all about. That's what's most important. All right. Okay. So let's get ready to rock and roll. It's an exciting day, right? SM146, just become a member. I think you're celebrating your memberships, aren't you? Is that what you're doing? Let me have a look. I didn't see it. I think you're celebrating your membership. Maker's Mark is smooth. Tonight, it's old-fashioned for me. Oh, yeah, nice too. There's a smidge of a chance of a rate cut. Powell hates Trump. He will hold back any cuts because he knows this could be good for Trump if he does a cut, if he does cut rates. I'll be very shocked. Cuts ain't happening, says Glad Instance. The trend, but June, I believe we will. Yes, there's definitely a rate cut in June. There's a 100% chance of that. I got a feeling it's going to be a red light because he doesn't listen to Trump. Trump wants cuts. Jerome Powell doesn't want to do it. 100% no rate cut. Don't buy anything. Don't believe there will be a rate cut today, says David. Hit the like button, says Josh Monroe. Hi all, beyond entertainment. Hi, what's going on? What's up? If you were smart, you would stay out until know the results. No, don't agree with that at all. Staying out of the market, we've proved over the last 4 years, live 12 hours a day, staying out of the market is a terrible idea. That's not a good idea. Staying out of the market serves no purpose whatsoever. I'm always fully invested with all my cash, all my margin and my refinancing. I'm always fully invested. And that's what it's all about. You want to be in the market. You can buy more if it goes lower and you hold if it goes higher. Sitting out, watching, waiting says you have no conviction and you don't know what you believe. Well, I know exactly where I stand. Being a smart investor means every penny counts, right? Absolutely right. Every penny counts. That's why every penny should be invested. Hey up, banana heads. How you doing, Ninja Cowboy? Let's can we have some love for Vaz? We've got 10 minutes to go, and I want everyone to spam the channel Vaz, and just to show you that I can spam better than anyone. The reason I want you to do this is today Vaz had his most successful FTOL video today. It's way over the usual watch time, way over the usual views, way over the click-through rate. So let's show some love for our new broadcaster, Vaz. The team is me, Sensei, and Vaz. Come on, no one can spam the channel like me. I copy and paste faster than anyone. I'm a professional. Let's see it. Vaz did great today. Two back-to-back videos. On Saturday, I've got a big surprise for you. Vaz might be going live for a brand new Saturday show. How about it? How about it? Who would like a show on Saturday? Sensei does the Sunday show and every day as well. But now we might have a Saturday show. Who wants a Saturday show from Vaz? Show some love. Show some love. Are we going to get a Saturday show on? I tell you what. I'm going to do a poll, right? Okay. Who wants a Saturday show? Who wants this is live, a live Saturday show. Remember, Vaz has never done a live show He's done an earnings once on the extra channel, but never here on the main channel with all the millions of people. Who wants a live Saturday show from Vaz? Put yes if you do and put no if you don't. Spam it, yes or no. Who wants a live Saturday show from Vaz? Okay, so yes or no. Let me do that. Let's go. That's coming up. That'll be Saturday morning. How about it? Very, very nice indeed. Saturday morning, and it'll be midday for the UK audience. So get excited for that on Saturday. Let's do that, right? Yes, no. Why isn't that? Hang on a minute. Why didn't that do that? Let me try that again. Create a poll. 9 minutes to go. Oh, it looks like everybody wants it. Yes or no. There you go. Who wants a live Saturday show from Vaz? The chat is going wild. I'm loving it. Good afternoon, Vaz. Happy to see everyone in the chat. RB, green light or red light? Let's go. It's green at the moment, as you can see. Reporting for duty, smashed it. RB, Rob C. Yes, I'm ready and waiting for a nice cup of Yorkshire tea. I'm bloody loving it. I'll tell you what, I'm bloody loving it. All right, here we go. So imagine Saturday morning. Every single day now, you've got me and Sensei, and now Sensei on Sunday, and now you've got Vaz on Saturday. I mean, seriously? What do you want? Now, well, we got 8 minutes to go. 8 minutes to go. I just got a text from Sensei. Guess what Sensei said? Said, Martyn, mention this. MartynLucasShop.com. MartynLucasShop.com. What am I talking about in the chat? MartynLucasShop.com. Let's have a look. We got something new. Let me show you in the chat. We got some novelty items just out. Novelty items. What is that all about? Well, look at this. We've now got all my catchphrases. We've got, oh, hello, what's this?
Vaz has become a member. Bonkers. Love it. Thank you and see you Saturday.
There you go. Well, hang on a minute. I ain't decided yet. I ain't seen the poll yet. What do you mean? See you Saturday. I decide what goes on Saturday. Right. We got free chicken. Because we say free chicken on the show, right? We've got a t-shirt with free chicken. We've got, you like this one. Crypto people like this one. What's this? You can regulate the exchange, but not the code. Look at that. Do you like it? You're loving it. I bet you're loving it, right? And we've got VU. How do you do? There's my phrase. VU, how do you do? If you're an investor like me, VU, how do you do? 7 minutes to go. Are you ready for the rates? The rate decision. Vaz, that's what it looks like. His and hers. Oh yeah, his and hers. VU, how do you do? What else have we got? Sensei? What else we got, mate? We've got, oh yeah, take care of yourselves. and each other. Oh, by the way, you've seen this? This is posh, isn't it? Look, my logo is on the inside of the collar. Classy, right? That just makes you realize it's the official merchandise. It's branded with the logo. Look at this. Take care of yourselves and each other. I love it. There you go. We got buy like Buffett. Now, let me give you a little tip. Right? Buy like Buffett. You like that? That's pretty good, isn't it? Right? How about that for your breakfast in the morning? Now, here's what's exciting, folks. If you add something to the cart, you can win free mugs. Look at this. I've won a mug. I haven't claimed it yet. Sensei's going, when's he going to claim his free mug? You can win free mugs, free T-shirts. We're giving stuff away all the time. When you put them in your basket, another 20% off. Right, and you can combine stuff as well. So if you link stuff together, you can like package it up. So if you buy a certain amount, you get bigger discounts, you get free mugs, all sorts. All right, you loving it? There you go. Of course, you're loving it. We've also got, as someone asked me the other day, actually, are you going to have any glasses? So is it in the mug section? Yes, it is. There you go. Look at this. Ooh, look at this. We got a beer glass now. There you go. Look at that. How cool is that looking? With the official logos. You like it? You can get a free one of those if you add it to the basket and multi-bag it and all the rest of it. Anyway, there you go. MartynLucasShop.com. And they come with perks and benefits and stuff. All right? Okay, we got 5 minutes to go. Stand by.
Switch today and get 2 free
Here we go.
5G phones.
We're on
like
standby. Rate cuts. I'm on it like a car bonnet. Right, let me refresh the screen. Now then. Rates at the moment are 4.5. Consensus and forecast is 4.5. That's what we expect. We're going to get it in 5 minutes. Now, that isn't the end. That's just the beginning. That's just the beginning. Once we get the rate cuts, or the rate hike or whatever we're going to get, after that, we get the what's important, we have the conference. Now, the conference is when you hear the tone of Jerome Powell, okay? So if you just tuned in, tap the like button, consider subscribing. Let's do something amazing today. Let's do something amazing, and let's get 80,000 subscribers. Come on, everyone, tap the subscribe button. Let's get 80,000 bloody thing. Come on, everybody. Come on, tap the like button. How many we got now? 275. I'm loving it, loving it, loving it. Okay, here we go. 4 minutes to go. Love it, says, love it, Marcus. Who's Marcus? You talking to me? I don't know. I'm Martyn Lucas. Maybe you mixed them up. I don't know. Jimmy Buffett. Hey, on my music channel, did you see it? When Jimmy Buffett passed away, I did the tribute for the Jimmy Buffett family. If you've not yet seen that, go and check it out. I did the tribute for it. I did a few songs. If you, how long have I got? Have I got a chance to show you? Look at this. So what you do is you go on to YouTube. Right, go on to YouTube. Let me show you. This is what you do. Look at this. So you go here. There's YouTube search bar. You go Martyn Lucas, Martyn, spell it correct. Martyn Lucas, Jimmy Buffett. So if I did anything with Jimmy Buffett, you'll know, right? Is it 2 Fs? Jimmy Buffett. It's 2 T's, isn't it? 2 T's. Martyn Lucas, Jimmy Buffett. Let's see what happens. And what do you see? Look at that. I did 2 here. This was one. I actually have myself singing with Paul McCartney. Look at that. If you're a Jimmy Buffett fan. All my troubles seem so far away. Okay, so if you want a tribute for Jimmy Buffett, this was seen by the family. I was actually talking to them on my X account. There is my Jimmy Buffett tribute. There are 2 actually. I'm mentioning this because someone mentioned it in the chat. That one, there was 2. Why is there? There's 2. I don't know why there's 2. Why would there be 2? I don't know. Anyway, there you go. Go and check it out. Very good, right? You didn't know I did that, did you? There you go. Now you do. Got all sorts of stuff. Okay, I'm loving it. Oh, that's another T-shirt coming as well. Donald DeBoyko. Hey, Donald, I tell you what, copy and spam. I'm loving it. So Sensei gets really annoyed because it's on his list. I said, do that one. There's people waiting. And one of our members here is waiting for a T-shirt with the printed signature underneath the logo. Sensei said to me, I'll do it today. Give him a hard time. If you ordered one of those and you're still waiting for him to do it, give him a hard time. This is a great channel overall on the this is a great overall of the merch store. Much better. Don't say that. Don't say that. Sensei will get big-headed. He'll go, see, told Martyn that I was going to do it. Yeah, all right. Martyn, notice me. Arcanum, I noticed you, mate. I'm enjoying the show. Your merchandise looks great. It is great, especially if you get the free mugs and free T-shirts. If you bag it all up, you can pay in any currency you like, so work out the best one for yourself. You can get free mugs if you get to a certain limit. There's all sorts. We give prizes away, points. I mean, you name it. We do all sorts. We're loving it, loving it, loving it. I live in Florida. I'm a big fan of Jimmy Buffett. I'll watch it. Yes, thank you much indeed. It was shared by the family. I think you'll enjoy it. Media, maybe 2 with the extra channel. Maybe 2 what? We want Bonky mug. You mean Binky Bonk? Binky Bonk mug? Sensei, they want a Binky Bonk mug. They want a Binky Bonk mug. Get onto it. You got it, Martyn. You got it. Donald de Boyko. All right. Okay. I'm on it. How will you know if it's an emergency? How? Because the tone of Jerome Powell's speech. Right, here we go. 1 minute to go. Here it comes.
I think inflation is staying stubbornly high, so I don't think the Fed is in a position right now to really try to counter that at this current juncture, but they will react to the unemployment rate. Look, there's one piece of good news here. The Fed does not have a dot plot at this meeting. They do not have to go on record and make a forecast. So I think that gives them some breathing room to at least start to think about, how they may backpedal a little bit here. I don't think they're going to move today. It doesn't look like June would be on the table at this point either. And I think the Fed's going to try to make it clear that they're just going to still wait and see how both, as David Kelly pointed out, both tax and tariff policies play out.
Okay, here we go. Stand by.
Jump in here.
Yeah, hey guys, from out west at the Milken Global Conference. Good to see everybody. Listen, maybe I'll take a different
12,
tack, but everybody
11,
I'm talking to here the
10,
last couple of days,
9,
a lot of heavy hitters, the bond
8,
market, finance, etc.
7,
they're talking
6,
less about
5,
sort of the things that we're talking
4,
about, unemployment rate, inflation.
3,
they're talking
2,
more about Jay Powell.
1. The Fed rate decision is standby. Standby. It was 4.5. Here it comes. Here it comes. It's coming down the Bloomberg terminal. Wait. Watch the market move. Watch the market. What's it? At 4.5, and down goes the market at the moment. It's just going down 4.5, but it's what he says at the meeting. Stand by.
That we're about to find out. Let's get to Steve Leisman for the Fed's decision on interest rates.
The Federal Reserve keeping interest rates unchanged at 4.25% to 4.5%. But seeing a higher chance of stagflation. They didn't use that word, but here's the language they did use. They said the risk of higher inflation and higher unemployment have risen, both of those together in the same sentence. They went on to say a further increase in uncertainty. There's a further increase in uncertainty
Markets
around
are holding.
the outlook, adding that
Wait
word
for the speech in half an hour.
Statement. Also noting
That's
that
the most
swings in
part.
exports have affected the data. That's why we got to that big negative GDP number, and they took note of that for the first quarter. But saying economic activity still continued at a solid pace, the unemployment rate is stabilized at a low level, and that inflation remains somewhat elevated. So all of that basically in line with our understanding of the hard data. They say they are watching risks on both sides of the mandate. The decision was indeed unanimous. Quantitative tightening will continue, and the committee is prepared to adjust monetary policy as appropriate, which is a language that they've used in other times.
It's a non-event at the moment.
Of both higher inflation and higher unemployment have risen. It really underscores that idea of there being risks to both sides of the mandate, and the Fed apparently being no closer to figure out which one needs more careful attention from the Fed yet. Kelly?
There we go. So listen here, folks. This is what's going to happen now. It was a 4.5, no change. The market is holding. It priced this in. There's no dot plot, so there's no sentiment until we get to the speech, which is in 27 minutes from now. It's how he presents himself on stage. It's whether he comes across dovish, hawkish, so on and so forth. So we have to wait for that. We've got 27 minutes. The good news is there was no emergency rate cut. We did not want a 0.25 rate cut. We did not want a half. We did not want a hike. So we got, rates are still high. Of course, I want it to come down for my margin, but I priced this in. I've allowed 2 rate cuts this year. It's only May. June is next. We're halfway through the year, and there's two cuts to come. Some will say 4. I say 2. I've always said 2. So this is a good story. What we've got to do now is in 27 minutes, Jerome Powell will take the stage, and it's his tone. If he comes across as dovish, great. Hawkish, not good. That's what we need. He did not bend to pressure from Donald Trump, which is good news. He's running the Fed the way he believes is right. And I love it. Really, really good. So we're all good. Okay, so fantastic. So stand by. And we just have to wait now for 26 minutes to see where it goes. Now then, I will come to you. I'm going to open up the phone line. If you want to call in, let me end the poll. You were right. Who wants a show from Vaz? 62% say yes, you have got it. While you wait, join me on the extra channel. Let me delete that now. Unpin this message. There you go. I've done that. So what we're going to do now is we're going to do a live phone in. You can react. Members only. You can call in, ask me anything about anything, whatever you want, whether you agree with me, don't agree with me, think I'm an idiot, think I'm a silly old sod. It doesn't matter as long as you're respectful, of course. You can call in and be on the show. It's members only. We don't want trolls calling in, obviously. That would just be stupid. So here we go. Live video phone in. You have to be a member. You have to tell me you're calling in because I don't look on the software to see you're calling in until you tell me you're calling in. Pin the message to the top. There it is. If you want to call in, you can react to what Jerome Powell said. Now, also, you can stay on the call if you want to. You can be on for a minute or you can be on for 10 minutes or an hour, as long as you want. It's up to you. But if you want to call in and have your say, how do you feel about it? You can share that. If when Jerome Powell takes the stage and we are broadcasting it for you, then you can be on the call with me, so you can be reacting, thumbs up when you like what he says, down like when you don't like what he says. So you can be on the show. If you are calling in, you've got to say, oh, Kent Paranormal is calling in. Simon's calling in, our first guest. Let me put you in spot number 8. There you go. Let me show you how this is going to look, folks. This is how it's going to look. There are 10 spots. One's already gone. There he is, Kent Paranormal. Simon, how are you, sir?
Whoop, whoop. Whoop, whoop. Evening, everyone.
Evening all. Lovely to have you on the show. What about that, mate? 0.25, exactly what we wanted, right?
Absolutely.
The same, no change, exactly the same.
Vaz donated £5 through a super chat.
Oh, hello.
I am expecting all 62 voters to be on the marks on Saturday morning. Thank you, everyone. Love it.
Lovely. Absolutely right. We'll come back to you in a second. I'm sure we're going to have more people calling in, wanting to give their opinions. You are happy with that, Simon? No rate cuts, just steady as we go?
Yeah, absolutely. I mean, if there's no rate cuts, then it just shows that the market is strong and the Fed is strong. So
yeah,
it doesn't show any weakness.
Yeah, I totally agree. I'm happy with that. The Fed didn't need to raise rates to curb inflation. They didn't need to drop them for danger either. They just kept it where it was. I like that. That's good. Now, the market is reacting. That's no big deal because this is what it does before the speech. Expect it to go back up again after the speech. Remember, stock prices do not reflect your business at all. People are now dumping to buy back. If you can't afford your stocks to go down 15% or even 50%, you shouldn't own them. So there you go. It doesn't bother me if it goes down 50%. I'll just buy more. And I'll lower my average once again. So if you want to call in, we've got Simon on the phone. You can be live with Simon, which is Kent Paranormal. You can be live on the show. It's the live video phone in is in the chat, pinned to the top. You need to let me know you're calling in. You can't call in unless you've told me you're calling in. You can't call in unless you're a member as well. I think we got Jim C telling me he's about to call in. All right, Jim, I'm waiting. There is Jim. Oh, wonderful. Jim wants to be on the show as well. Spot number 9. I'll put Jim in the chat. Jim, you've got no camera at the moment. If you don't turn your camera on, I will have to end the call. You have to be on camera. Jim, you've got no camera at the moment. Market don't like it, Mike Koza. No, not at all. Not at all. Mike, I disagree with you. This is exactly what the market predicted. This is exactly what the market expected. This is exactly what the market wanted. Otherwise, the markets would have sold off beforehand or pumped or whatever. They didn't. They've been going sideways. So what we got today was exactly what we asked for. So it's selling before the presentation. That is all it is. Jim C is calling in again. So let me try and drop him in spot number 9. There we go. We've got Kent Paranormal and we've got Jim. How are you, mate?
I'm doing well. How are you doing, Mark?
I'm well. You're famous now, mate. You have your very own T-shirt in the shop, the free chicken T-shirt.
Well, I look, I got to go here. Hang on.
That was because of you, that was. But if you're going to ask me for royalties on your T-shirt, you can forget it. But nevertheless...
I just want free chicken on it.
Yeah, free chicken. Have you seen it on the shop? Have you seen it?
No, I have not.
You ain't seen it?
No.
Unbelievable. Let me show you this. Look at this. This is your T-shirt, sort of your T-shirt. If you go over to the shop, look, to the novelty items, there you go. And where is it? There you go. Free chicken, this one here. Look at that. Free chicken. There it is. That's your very own T-shirt. That's what it looks like, his and hers. There you go. Look at that. Free chicken. There you go. Let me bring you back on the screen in a minute. There you go. How about that?
So that's great because when I just saw the show and I was off to the side here and I was watching you go through your merchandise shop there and I seen free chicken and I commented very quickly. I said, "What? Free chicken shirt?" So no, I'll be one of the first ones to buy one. And
it's going to be on a mug soon. So you have a T-shirt and a mug every breakfast sitting there, free chicken. You know what I mean?
Well, that's great. I appreciate that.
Yeah, it's a bit of fun, isn't it? Any color, any style, any size, male, female. And don't forget, if you buy stuff together, bag it all up, you'll get free mugs, there's all sorts of stuff, 20% discounts, all sorts when you bag them up together. Right, stand by, guys. I'll come back to you in a moment. We're keeping the show moving. We've got 20 minutes to go before Jerome Powell takes the stage. That's when the markets will recover. It's selling off before he comes on the stage. That's what happens right now. If you want to call in, you can join the crew tonight. We've got 2 Lucasades calling in, Simon and Jim. If you want to be on the call with them, you can react, you can ask me a question, ask me anything you want. Ask me anything you want apart from my credit card number. I'm not going to give that out. But other than that, ask me what you want. All right. And you can be on the show. Let's have a look. David, well, if we do get a rate cut in June, then we are for sure going down. David, you just said it was all going to crash a minute ago, and it didn't. It went down the smallest possible amount. I'm not concerned at all. Now, if you're looking at that going, yeah, but you're down 1%. I'm down $1.5 grand. That's nothing at all. The S&P is down less than 0.5%. I'm all in on margin, so everything amplifies for me. Amplifies down, amplifies up. That's how I invest. Market don't like it. They're not bothered at all. That's nothing at all. I don't like the idea of a private org running the Fed. Private organisation, they're completely independent. Imagine if we had the government running it. Imagine that. Oh my God, it would be crazy, wouldn't it? Darwin Shapiro, buy this dip. Well, not really. We've already bought the dip a lot lower than this. We bought it 25% from the peak to the trough. I went all in and bought the very bottom, and I showed you how you can time the exact bottom by doing that. Markets will bounce when JP speaks. Either bullish talk or dovish will determine which way we go. Amina, how are you? Why does the market overreact if the market expected the results? Because that's what the market does. Amina, you have to remember, Wall Street aren't investors, they're traders, and they sell it to buy it back. They got what they wanted. They now know the market is stable to go back where it was. So what do you do if you can move the market? You sell it, you take profit, you drive it down because you can move the market, we can't, and then what do you do? Buy it back and make more money. Simple. The only people who get fearful are people that don't know what they own. So this is perfectly normal. We've seen the markets go down when an earnings call is positive. It happens all the time. So don't worry about stuff like that. This is not a bad day at all. All right. I still think Is This Live would be a good idea for merchandise. Ivan Silver, Is This Live? Who wants Is This Live in the chat? If enough people say we want Is This Live, I'll get Sunday to make one. Will there be another dip, Martin? Will there be another dip? There's no evidence to support that. CPI was good. GDP was good. Inflation is good. Rates are held the same. We're about to get a positive impact with the China deal. We've got deals being done with India, despite the war going on now in India, or the fighting, I should say that really. Historic deals are being done from the UK with India. So there's no reason for anything to go down. We've already had the shock. There could be bigger dips, but for other reasons. The market is still overvalued, but it wants to go up. And this has proved it again. I mean, it hasn't hardly moved at all. So anyway, Google at this low PE is a good buy. I agree with that. It is certainly undervalued, Google. Good evening, family. George, how are you? Fear in the market right now as no one knows how Trump will react to the rate drop. Is this live? Vaz, is this... Yeah, Vaz, yeah, we know. Yes, we know. Is this live? People want that. Okay. All right. If one more person says they want Is This Live, I'll get Sensei to make a t-shirt with Is This Live. I've got Vaz, I've got Ivan Silver, and I've got Poor Man, Rich Man. If I get one more person, I will give Sensei the order to make Is This Live t-shirt. I'm writing it into the text now. Is this live t-shirt? I'm not going to send it until I get one more person. There we go, Jim C. Jim C did it. Is this live t-shirt? Thank you. Right, there it goes. There goes the text. Is this live? Any color, any style, any size with the logo. Is this live? There you go. Sensei has the text already. Jim, I'll give you royalties.
Savage Faith Creations donated $2 through a super chat. Jim, I'll give you royalties. Rolling on the floor laughing emoji. Rolling on the floor laughing emoji. Rolling on the floor laughing emoji. Smiling face with hearts emoji. Smiling face with hearts emoji. Smiling face with...
That couldn't fit it in. All right, 15 minutes to go. I love it, Stacey Bailey. Very, very good indeed. Okay, let's get ready to rock and roll. Is this live? Kimberly, is this live? Binky Bonk Club. Oh, God. Who wants that? Binky Bonk Club. Are you sure this is live? See what? Are you sure this is live? We'll have two versions. Is this live? And are you sure this is live? All right. On the back, maybe. On the front, it's is this live? On the back, are you sure this is live? There you go. Are you sure this is live? There you go. You got your Very Home t-shirt. I'll have Sensei on it today, and it will be out by, what's the time? By the weekend. There you go. Google might note that the undervalued Martyn Lucas investor. Google might not be that undervalued after today's news regarding the DOJ. Well, we'll reassess it then, shall we? 14 minutes to go. Google is down 8%. Stacey's hiding. Stacey is she's hiding comments. You should behind the stream. It's good to buy more S&P. Not at this level, it's not. We're still 100% overvalue on the S&P 500 if you want to completely look at that. So not at this level, it's not. Remember, I bought the bottom when it was 494. That was the bottom. In fact, it was lower than that, actually. I'll tell a lie. Yeah, I think it was around about the 480 on VU. And I bought a lot of shares, I think 30 that day. About 7 or 8 grand that day. It's good to buy more in the S&P to lower your average. Yeah, only as long as it's undervalue. At 17.9 times earnings, that was the go signal, but we're not at that level now. We're back to about 20 again, so you've had your chips. Riding and watching is not worth working out for me. I wouldn't imagine it is. All right, Jerome Powell, here we go. Oh, got a few minutes to go. I'm going to refresh that screen in a minute. We've got 13 minutes. 13 minutes indeed before. Now, the markets are going red. We're going to have to go red, folks. Oh, no. Yes. How bright? How red is it? How red are we going to go? Oh, that's bad. That's bad. That's a 20% crash. I would say we're about there. We're about there, all right? We're about there. So we're not going to stress too much. And we'll turn the studio red. We have to go red, folks. But there it is. Let me just refresh the screen for my live feed, and then I shall be right back with you. So here we go. Every hour I have to do this to keep it fresh. Keep it fresh. I should keep Wall Street in the fridge. That's what we need to do. Let's refresh it. Here we go. We're waiting for Jerome Powell to speak. 13 minutes ago. Click on there. There we go. We got Mike Santoli. No, we got somebody else. Let's bring him in.
And from Claudia Saab, and we'll take a quick break.
Hold on a quick break. Bloody American TV. Everybody's always on a bloody break. Everyone's always on a break. You know that NBC guy? You know that NBC guy when you go and watch him every night, the late news show. I forget what it's called now. Could you guys remember, Jim? What's that guy called? The NBC news guy in the evening. Anyone know?
NBC.
What's his name? There's a guy in the evening.
Lester Holt?
Not Lester Holt. That's another one. That's Dateline. That's pretty good. I like that. But no, it ain't that. What they do the nightly news. And they do a news story, and then they take a break, and then they come back, and then when they get near the end, they try and cram in as many commercials as they can. And what they do, they'll say, we'll be back right after this. They go to a break, they come back just to say goodnight. It's like you just came back to say goodnight after a break. You didn't even do anything. Just say goodnight the first time. That drives me. You ever seen that?
Well, I don't watch NBC, so.
Well, they all do it. They all do it in America to get all the adverts in.
I don't even watch the news anymore. The way things are going, hardly.
Don't need to watch the news, do you, mate? You don't need to, do you? We're live here, mate.
Yeah, there you go.
There you go. And if you go YouTube, if you go YouTube Premium, you see no commercials. Brilliant.
I get free chicken here.
Free chicken. Are you happy with the result today?
A result of what?
Well, we got a pause, no change. Are you happy with that or not?
No.
You wanted a rate cut?
Yes.
Why?
I think there's so many things going on right now in our government, and I live just down the street from it, and even the people around here in the Washington D.C. area are very very concerned on the way things are going. I mean, even in as you know, I'm in the crypto world. They sit there and they say they're gonna make decisions on things, and oops, they pull the rug from out underneath you, and then wait, and then we're gonna do it later. Everything is later. There, to me, the word on the street is something's going on. They're afraid to do things right now because technically, if they do it, then you're going to see the market go sky high. And I don't know why. I'm hearing that everything's being suppressed right now, and there's a reason for it to be suppressed. And there's going to be that moment where again, Trump is going to be the big winner out of this because he's going to make everything go bad, and then all of a sudden he's going to turn around and everything is going to shoot up, and he's going to take all the credit for it. And that's what's on the street around.
Yeah, but isn't that a good opportunity for you to buy the dips when you can?
Oh, I am. I'm running out of money.
Yeah. Well, tomorrow I have a big story coming out for our UK audience about the way the UK government is manipulating crypto. And I have a story about how the Trump family all won on the Trump coin. And only a handful of wallets held all the profit. Everybody else lost all their money. And I'm bringing that to you tomorrow with a big petition as well with the UK government. You know how we did the XRP petition. Something really big is happening tomorrow. So yeah, I've got lots of thoughts on that. We've got 8 minutes to go. If you want to join the panel and call in, you can call in. The link is in the chat at the top. You have to be a member. You have to let me know you're calling in, and you can ask me a question. You can be on the show. You can, as long as you're respectful, you can ask me anything you like. But you would have liked to have seen a rate cut then. I'll take it.
Yeah, and I want to add on to what you were saying there a moment ago. And it's funny that in the government, they're having the sessions on crypto right now to get things together. But if you notice in the news yesterday, Maxine Walters did a big spill, and all the Democrats are now saying that we're positioning ourselves that any kind of crypto bill that comes down the line, it's not going to get pushed through. And now they've got 4 of the senators right now that are involved in it, and these are the things that are causing some conflict on the Hill right now.
Yeah, well, this is partly what I'm going to cover tomorrow on a special live show tomorrow, all about this, because another thing is that we're told that SEC and certain regulators are there to protect us from us, but very often the enemy isn't us. It's those that control the power are the enemy, because in the UK, you can borrow money on a credit card to gamble, except it's discouraged and persuaded not to do that with crypto. And if you do it on, if you do that with gambling, zero capital gains, but there is capital gains on crypto. It's a very unfair legislation, and it's done to suggest that it's to protect you. However, you can gamble. Now, I think unless you're buying Binky Bonk coin, which is, crazy. But if you're buying XRP or Bitcoin, for example, and you've understood it and you know what you're doing and you're investing in it, isn't that wiser? And shouldn't that be more supported than borrowing money to flip a coin red or black, all out gambling? But yet the government are okay with that, but they're not okay with you borrowing money to buy crypto. How about that? That's UK law. Yeah.
I mean, you're right. And again, I wanted to add on more is Maxine Waters also said that because she thinks that the president is corrupt, with all the Trump coin, he's got all this coin, he's setting everything up for him to be a big winner and everything. So that's why they're being against it right now. But I don't think that if you look at it totally, if you look back in the Biden's administration, you had quite a few senators that had insider trading.
I was just about to say, I've got to cut you off, Jim, because we're running out of time. But yes, sorry. Absolutely. No, we're okay. We're just coming down to the last minute or so. And I just wanted to make the point where the people that are saying it's wrong what Trump's doing are the same people that are using inside trading from government. So
Nancy Pelosi.
Yeah, well, there's many. All right, we need legislation to protect us from the bad actors more than ourselves, I think. So anyway, that's something we're going to discuss tomorrow. It's going to be a big event tomorrow. Hopefully you'll see that with me. All right, okay. We're just a couple of moments ago before. You can stay with me on the call, hang up, do what you want. But we know what the rate decision is. But firstly, Jim, just very, very quickly, what do you want to hear from Jerome Powell? Dovish or hawkish? What do you want from him?
I just want something good. I want something to make people feel a little bit better and start investing.
Yeah.
More.
Simon, what do you want to hear from Jerome Powell?
I want him to be dovish, but I agree with Jim. I think between Jerome Powell and Trump, they're having a bit of a conflict, and it's not good.
Well, we can debate that. That's absolutely right. Well, I've got just a couple of minutes to go, guys. Thanks for calling in. You can stay on the line, hang up, whatever you want to do. More people might join you. We'll see how it goes. But thanks for calling in. I appreciate your time. Lovely. There is Jim and Simon who've called in to be part of today's event. Fantastic. Right. Now, we're just seconds away now from Jerome Powell taking the stage. I've got the feed ready to go. Of course, there we go. American TV on a break. Always on a break. Always on a break. Okay. If you'd like to tap the subscribe button, we're nearly at nearly 80,000. It'd be wonderful to hit that today. It's possible. Please consider subscribing to our channel and tap the like button would be absolutely wonderful. We've got 326 likes now, 664 watching, which is as much as you can ever get. The reason why I say that is 50% of people are not signed into Google. I have no idea why. I think it's a bad way that YouTube explain it. People think that they have to be a YouTuber to create an account. You don't. Most of my viewers aren't making videos, nearly all of them. So just get yourself an account on YouTube and you can take part, you can subscribe, you can engage, you can chat, you can leave comments and all the rest of it. But look at that, very, very exciting. Okay, here we go. Let's get ready. We are just 2 minutes ago.
New school standards.
We'll check all the feeds. I've got several backup feeds in case we lose one, we switch to another one. But here we go. Big moment now. Let's see what I just said, how the markets would come back up again. Now, the reason why they're coming back up again, because if you followed this like I have for the last 4 years, when Jerome Powell starts to speak or anything he does that can be perceived as negative, the market will sell it again. So this is a trader's dream right now. It pumped before he came in. The rate came out, it went down, even though it's what we expected. And now it's come straight back up again, just so they can dump it once again. All right. Again, I've always said this: you either are a trader or you are an investor. I do trade, but I'm making more money of being a long-term investor than a trader. So if you are in a stock and you can't afford it to go down, 15%, 20%, you really shouldn't be investing. You should only be investing if you can afford for your positions to go down 15, 20%. I can afford mine to go down 50%, including with margin, and still wouldn't bother me at all. So we've got 1 minute to go. If everyone could tap the like button, consider subscribing. Here are all the links before we go into Jerome Powell. We're on standby. Here we go. Here's a few links you might like. There's my X. If you follow me on X, you'll see all my trades before I make them. When I announce all my interviews with CEOs, you'll see that there. So consider follow me on X. There's my Instagram. There's the free stocks for Robinhood USA. There's the free stocks Robinhood UK. There is my Discord. We've got a premium Discord server now where we offer training, all kinds of stuff. Just a couple of bucks a month. That's all it is. So, and you don't pay for the training. We provide it for free. We're just offering a great service now, premium. Okay. If you want alpha spread, Seeking Alpha, all the software that I use, you can get it with discounts, free trials, which you can't get without my referral. There's the extra channel. And there is the all links for the newsletter if you want the birthday card. And there you go. All right, we're ready to rock and roll. Stand by. 10 seconds to go. Jerome Powell is normally pretty good for time. So here we go. Stand by. The moment he comes on the stage, I shall bring it to you. This guy here always likes to butt in just as he comes out and starts to speak. He always says, and now the chairman of the Fed, as he already starts speaking. Always does that. Don't know why he does that. I just got to make sure I get in before he says something. All right, okay. So stand by. Jerome Powell will walk out of that door any second now. He's probably on the phone to Trump going, why didn't you lower the bloody rates? Probably.
Club of Chicago, and clearly the committee getting behind it. March 19th was the last Federal Reserve meeting. April 2nd is so-called Liberation Day squeezed in between. A generational shift in trade policy, totally shaking up the outlook for this Federal Reserve.
Which makes it incredibly difficult for them to give actual forward-leading...
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer-run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Good start. Market went up,
Steve
like I said.
CNBC. Thank you, Mr. Chair, for taking my question.
Nice and green.
A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to
If you could tap the like button and subscribe, that'd be wonderful. Thank you very much.
And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 with the flash shocks. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
Good question.
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient.
I see June as a rate cut. And, that's what I always said.
When,
the first
when
one,
things develop,
2 cuts.
Of course,
June.
we have a record.
There's no reason not
we can move
now.
quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out And then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place. And, as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. we haven't faced that question in a very long time, so again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are. We're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen. But they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. and by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not in your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way. But that's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there would be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. We don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa.
Well, let me switch to backup stream, stand by. We got a backup stream. Here we go.
Very challenging question. Now, there can be a case in which one goal is very far. One variable is very, very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market wasn't really a trade-off. Super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment. But the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other. And right now, there's no need to make a choice and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path. And it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Good answer.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two. Potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly? I don't want to get we shouldn't be involved even verbally in questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decision. So the volume of the imported goods has increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to. I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you were monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And, right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night. And this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question. Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
There we go. Fed Jerome Powell once again. Another day of uncertainty, but it's also a day of certainty. No rate change, business as usual. I'm happy. This is what I predicted. This is what I budgeted for. This is what I invested for. I said the market would sell off. It would pump into the meeting, then sell off before the meeting, and then rally again. It did exactly that. I'm very happy. I'm holding my positions. This is allowing me more time to reduce my margin. There's no reason to buy anymore. Just holding our positions, and we look forward to the next one. And when we get potentially a rate cut on the next one. But I'm happy. Long-term investors love this. Traders, you don't know what you're doing. You're a trader. That's the price you pay to be a trader. I'm very happy as a long-term investor. I can always allow my portfolio to drop 50%, including all in on margin. So if it does, I just buy more. If it goes up, I don't do anything. I just enjoy the dividends, which now covers 70% of my margin cost. That's my dividends from the S&P 500. Think about that. And that is going to come down dramatically because in another 2 weeks, I get paid again and I'm not buying anything. So I'm reducing my margin again. By about July, my margin will be completely covered by the dividend payments. So that's great. And then by then, of course, interest rates will be down and it will just improve. So there we go. Now then, we've got some big stuff coming up for you. First of all, if you could tap the like button, that would be fantastic. We've got 600 watching, 400 likes, or 393. Thank you. Consider subscribing to our channel. We're live 12 hours a day. Now, listen, we've got some really big stuff coming. A big special tomorrow. You may remember about a few months ago, we did a big event to enact change with XRP. And it worked. We got a petition signed. I got it to the right people. I'm not saying that we had anything to do with it, but policy did change and the SEC did drop their case. Well, tomorrow I start something even bigger. I'm taking on crypto globally tomorrow. A big special coming up. So look out for that. I'll be live in the morning with that special. Sensei will be live first for the breakfast show. I will then be going live afterwards with a government petition. Huge event tomorrow. You don't want to miss it. It's going to be a huge event tomorrow. So look out for that. What I'm going to do now is I'm going to give you a link to an event. I think, yes, I've done it. Next, must watch. Okay, we believe the next space will be EV tolls. And we think it's the next space to be interested in. So there's a link in the chat. It's also pinned to the top. And as I end, it will take you directly to a premiere. Sensei and Vaz doing a premiere and getting ready for next week with EV tolls. Vaz is going to be here on Saturday doing a Saturday show. Sensei's now doing the Sunday shows plus every breakfast morning as well. I'm here all day, every day in between all of that. But for this Saturday will be the very first time we have our Saturday show. So there's that to look forward to as well. Many of you are asking in the chat, is Is Jerome Powell wearing a black tie? No, he was wearing a purple tie. Draw no significance into that. There's nothing to be said there at all. In fact, if you know Jerome Powell, his favourite colour is purple. So like I've got a purple tie today, or sort of slightly pinky purple tie, it doesn't mean anything. He said that before. So stay right where you are. It's a good day if you're an investor. It's a bad day if you're a trader. You're just going sideways. But of course, the purpose of investing is to buy undervalue, which we did a few weeks ago. We went all in, and now we're simply holding for time. And that's what we want. The longer this goes on, the more money is devalued, the more stocks go up by default. So rates will come down. When they do, markets will rally, and we want to be in. So earn your money the old-fashioned way by going to work, buy more shares. When you get the dips, hold and wait. This is an investor's dream. Like Warren Buffett said a couple of days ago, he's waiting to buy. He waits, and when the signal is there, he goes all in. That's exactly what I do. So there you go. I hope you enjoyed the show. Stay right where you are. I've given you the link in the chat for our premiere. As this ends, it'll take you right there. Get ready for our next sector to take off. That's what we're looking at. That's what we believe. Watch the premiere. It'll take you to the next one. And then join me on the Extra channel. I'm live on the Extra channel 24/7, 7 days a week. I'm there live right now because I'm about to make a special promo video for the morning, and I'm taking on the UK government with crypto. Yep. For those of you who know, I do have some history there with UK politics. So join me in the morning for that. That's it from me. Thank you very much for joining me. Stay right where you are. It'll take you directly to the premiere, but I will see you back in the morning. That's it. This was the closing bell because it's 2:30 in the afternoon. I'm getting ready for our big presentation in the morning. I'm taking on the UK government in crypto. Can you afford to miss it? I don't think so. Make sure that you look out for the bell. Hopefully you've subscribed and rung the bell and you tap the like. That way you're more likely to see my content in the morning. If you want my socials, there's my X, there's my Instagram, free stocks for Robinhood, free stocks for the UK, Robinhood. There's Discord for the free training. There is the membership link. And I think we are all done. There's the Friday night concert, the music. There's the Extra channel. There's the newsletter, Seeking Alpha and Alpha Spread. Lots of links to keep you there interested. All right, I will see you back right now for the premiere, and join me for that. I'll love to see you in the chat. That's it from me. Thank you for the show, RB. You're welcome. See you in the morning as I take on the UK government. Join me to find out what it's all about. Until then, as always, take care of yourselves and each other.